Have you ever seen price move up, then come back slightly? Many beginners think the trend is over at that point. But most of the time, that move is just a pullback. In this video, we'll explain pullbacks and retracements. Let's start with pullbacks. A pullback is a temporary move against the main trend. In an uptrend, price moves up, then pulls back down slightly. In a downtrend, price moves down, then pulls back up. Pullbacks are normal and healthy for a trend. They allow the market to pause and breathe. Now let's talk about retracements. A retracement measures how far price pulls back. It shows the depth of the pullback. Small retracements suggest a strong trend. Deep retracements suggest a weaker trend. Many traders use tools like Fibonacci to measure retracements. But the concept is more important than the tool. The key question is simple. Is the trend still intact? Beginners often make one big mistake. They panic during pullbacks and exit too early. Or they enter trades right before a pullback starts. This leads to frustration and losses. So how can beginners trade pullbacks better? First, always identify the main trend. Use higher time frames to see the bigger picture. Second, wait for pullbacks to key levels, such as support, resistance, or moving averages. Third, look for confirmation before entering. Don't assume every pullback will continue the trend. Sometimes pullbacks turn into reversals. That's why risk management is important. Always use a stop loss. Pullbacks offer better entries with less risk, but only if traded with patience. Quick recap. Pullbacks are temporary moves against the trend. Retracements measure how deep those moves are. They are normal and healthy in trending markets. In the next video, we'll talk about range-bound markets.